Good afternoon, PTI. Look, my name is Eric. I'm one of the new people for this group. Today, we're going to invite the best buyers agent in Sydney. Her name is Henny. She will give us some update of the Sydney market. Now, let's welcome her. Hey, Henny.
Hi, how are you?
I'm good. I'm good. How are you?
Good, thank you. Let me just turn on, make sure the video's on. There you go.
Oh, good. Thanks for joining us.
Oh, thank you for having me. It's always good to give an update to PTA members.
Oh, thank you. You look great. You know, with the
Oh, thanks, Eric.
still look nice, fresh, full of energy.
Thanks.
Look at Henny. Today I want to invite you to give us some update. You see, after I feel from pretty much from March, April, there's a lot of changes, and all the media thing has changed the tone, saying the market has shifted. Some say of the crash, which I don't believe so. But you are on the ground every day, every week, so just want to hear some on-ground knowledge from you. So lots of people say the market has dropped, has slowed, right? What's your observation from the ground up?
Look, it's definitely changed. We are definitely now in a transition market. And we're moving sort of from a seller's market towards a more even market. I wouldn't say it's entirely in favor of buyers as yet, but certainly a more level playing field than it was, say, a year ago. As you know, prices went up. You know, I'm a Sydney specialist, and as you know, prices went up, 25, 30% in some suburbs, in a 1 year period. So the market's gone up so much, and it had to stop. It couldn't have kept going, and we certainly have seen that now. And what we're getting is, I'm sure all the PTA members who follow property would know this, that you are getting a lot of emails with price revisions. And quite dramatic price revisions. I have properties that come down $500,000 in price guide. And it doesn't mean that the value of the property has necessarily dropped, by 500,000 or $1 million, in a few months. It's just that a lot of those vendors were probably the ones that the agent had spoken to last year. And they were still in a 2021 price mode, and perhaps they were getting their house ready before putting it on the market. And by the time they actually launched in February or March this year, the market has shifted. So the vendors then have to adjust their price expectation from 2021 price levels to 2022 price levels. And that's why agents are very quick to issue these price revisions over email, and they might realize that the numbers are quite low at the open inspection, and they're using the price reduction to attract new buyers to the property. So one property that, I was following had a price drop of about $1 million in the price guide, starting at $6.5 million. And then after 3 weeks, the price guide had dropped to $5.5 million. Now, it doesn't mean that the vendors will sell at $5.5 million. Their expectation is probably still in the sixes, but they're using this sort of bait pricing now and dropping the price guides to bring buyers through. So that's really noticeable. The other thing is that buyers are adopting a sit and wait approach, and they're not feeling any sense of urgency whatsoever. There's no desperation to buy. Whereas a year ago, if you didn't buy, the next month, the same property would be, 50 to 100,000 more expensive. So buyers felt tremendous sense of urgency to buy last year, whereas now buyers can take it or leave it. If the price isn't right, or there are a few niggling issues with the property, they're quite likely to just sit and wait and not be in a rush to commit. What I am noticing, though, is that not all properties experience the same level of changes. So what we traditionally call the A grade property, the A plus, B plus sort of grade of properties, they're still selling well, and they're still selling at a decent price without too much of a drop in price. The ones that are really struggling, and this is why we always emphasize buying the best property as opposed to chasing a bargain, is because the C and D grade properties are now not only experiencing price reduction, but sometimes they can't even sell. So that's why PTA members, are usually quite savvy, and they know that the focus should always be on buying the best property and the best asset rather than going for the cheapest price point. Right. A couple of other changes: auction clearance rates are clearly down all over Sydney. And that's not just because people aren't bidding at auction, but because agents are smart enough to know that now there are often just, maybe 1 or 2 buyers per property. And when you only have 1 buyer, you can't run an auction, because that buyer may not bid on come auction day, or that buyer may realize that they're the only buyer interested. So what agents are doing is they're selling them quickly. If they can pull a deal together prior to auction, they will, because they know that come auction day, it's a huge gamble for the vendors. And so these agents are now following this, close that buyer out mentality. So everything is still advertised in Sydney as for auction, but more often than not, they're actually transacting, if they can, prior to auction. A couple of other points, and then, go ahead and ask me some questions, is that flipping properties is no longer a guaranteed success in a transition market. So early last year, people were buying properties, then doing a really quick renovation, just a spruce up, cosmetic sort of update, and then putting it back on the market. And they were making, in some instances, up to $1 million in 1 year just by doing simple updates. You no longer can do that now, because there's no, once the market is turning, you can't guarantee that you'll achieve those sorts of price points, especially when you take into account stamp duty costs and selling costs. Those flipping approach doesn't work anymore.
Yeah.
Right? And then the last thing is that sellers now, the reason why there's not a lot of stock is that sellers now are unsure whether they should hold out and list and sell now before the market gets worse, or do they just wait it out until, they really need to sell. And it just comes down to their motivation, whether or not they have somewhere else to go or not. So as an example for this, there are a couple of houses on the market at the moment in an area that I cover, and the price guides are around $8.5 million. In 1 week, these properties are getting 80 people at the open inspection. That's 80. And often there's a line out the door, right? I mean, that's crazy. Like, clearly there's not 80 people out there with $8.5 million to spend all at the one time. So, but what we're seeing is that a large number of those people inspecting are in fact neighbors, trying to understand the market, trying to figure out when is the right time to put their listing on the market. So the reason why you have this queue outside of, $8.5 million property isn't that segment is particularly overwhelmingly successful right now. It's because a lot of people are nervous, and these are people who've owned their homes typically for 20, 30, 40 years, and they're just waiting for the right time to list and sell.
So they're the fence sitters.
They just don't know what to do. And I think that's completely understandable, particularly if you have nowhere to go, which a lot of downsizers have that problem, where it's fine to sell and get, a huge price, but where do they go next?
Yeah, I find it funny. You see, in 2021, right, the people fear to sell because they don't know where they're going to buy, because they're in the racing market. Now it's become like a reverse, but still some the vendors still not hesitating what to do.
Yeah. It's always a big change in someone's life, right? Housing.
Yeah. Look, hey, you see, so on the media, especially with news.com.au and some others saying, oh, the market could crash, and with interest rise, with the state economy, with the inflation, probably going to, because we had a huge growth, they are saying, well, we're going to have a big crash. Do you see that coming?
It's always hard to predict. I always think it's hard to predict more than 1 quarter at a time. I don't see any huge crash, certainly not in the core established area where people want to be. I think the areas that might be more affected would be areas where there's a lot more speculative buyers, where people are buying and selling and turning it over. Those might be more affected. I think there might also be, we have to remember that it's not just the economic factors that drive the property market, but also lifestyle factors. So I think, what is underrated is the influence of COVID and the work from home lifestyle. If companies go back to a model where they expect employees to go back to the office, either full-time or 3 to 4 days a week, then I think we're going to see the inner city and those core suburbs around the city, strengthening in price again, because in the last couple of years, people were looking for space and looking for lifestyle. So there was a lot of move towards regional areas, Central Coast, people moving to the, Bowral, they're looking for that sort of lifestyle. I think those will be affected if companies mandate employees to go back to the office more, So I think that's an underrated factor. People look at interest rates and, all of those things, but I think there are other factors at play as well. Yeah. And as an example, if you look at the Central Coast, and I'm not a Central Coast specialist, but I'm just looking at the data here, their median house price have risen by almost 53% in the past sort of two year, 4 months period. So that went from 640,000 as a median house price to now about $979,000. So if you look at that, is that going to continue? Is that going to crash? I think a lot of it will be decided by how many, Sydney-siders continue to go to the Central Coast and push the price up or not. Yeah.
I don't know. It feels like they moved the countryside. It's been a little bit of a panic move. I don't know. I'm thinking maybe.
Yeah.
That's
and we track data. So what we do is we track price guides when properties are listed, and then we track what they actually sell for at the end. So what we did was I took the data from first quarter of 2021 and I compared it against the data from first quarter of 2022. So what will be interesting is that in the first quarter of 2021, we tracked 700 properties in that one quarter. And that's not all of the Sydney, that's the area that, I operate in. And on average, they sold for about 16.5% above the price guide. If you look at first quarter of this year, we tracked about 600 properties. So there's a little bit less on the market. And they sold for approximately 7.3% above price guide. So we're really looking at, already half the, increase above price guide between first quarter this year and first quarter last year. So prices have definitely dropped for sure.
Yeah. Okay. Yeah. You mean kind of a correction?
Yeah. It's not normal for everything to sell, at 20, 25, 30% premium. That's just not sustainable.
Yeah, now comes another question. So if the like you say, if the market does have some correction, the question would be, should I wait to see, or should I just sell? Or let's say if I bought a property last year, I was high peak. Now we're seeing there's a possibility the market might drop. Should I hold off or should I sell it to reduce the potential loss?
Yeah, look, I think it comes down to two things. One, did you buy a really good property that will do well long term? Or did you buy just because it was cheap? And, the property really is going to be problematic down the long run, right? That's the first question I would be asking. The second question is basically what you would do with the money if you sold. Because it's one thing to sell, but once you sell and you liquidate, do you have a better place to park that money? Because if you end up having to buy another property and paying another round of stamp duty, and then obviously paying the selling costs associated with the first property, is that still worthwhile? Because I think at the end of the day, if you have a really good asset, you should hold on to it longer term. There's no need to panic and sell, immediately. But if you accidentally bought a lemon, or you were just desperate and you just needed to buy at that stage, and that property isn't really the best property, then it makes sense to sell it and then take the proceeds, if you can, to invest in a better grade property. So if you have a D grade property and you are able to sell that without taking a loss, and in fact, if you could sell it and somebody would want it, take it off your hand now, you should get rid of that problem and then buy into a B or, a B or an A grade property now with the same amount of money.
So use the money in better quality assets.
Correct. Yeah. But first you have to identify whether you bought an A, B, C, or D grade property. Because if you have an A grade property, you shouldn't sell it. You should just hold on to it.
But it's interesting. I think that if you buy, like you said, A grade, really good quality, I don't think the price will drop actually. I think the flow grows.
I mean, they have dropped as well, but it's about upgrading the asset, right? It's not necessarily about saving money or anything, but it's about trading in an inferior asset for a better asset. Which in the long run would do better and would outperform an inferior asset.
Yeah, okay. So sense, that's really good insight. So look, if we what buyers want to buy right now, so what's your advice? Like go hard into it or wait and see?
The best time to buy is when no one else is buying. In fact, that's often when I buy my properties. When I see that the market is turning and there's a lot of fence sitters out there, there's a lot of nervous vendors, you could buy really well, but you have to know what you're doing, of course. But the general advice for owner occupiers is always if you're holding long term, you should buy the best possible that you can for your money. So don't worry about the bargain, even if it's, you're buying an A grade and it hasn't dropped as much in price as you had hoped, if it allows you access to enter that, level of property, you should go for it, right? Because it's a long-term hold. If you are an investor, you do need to be a little bit more discerning. So we've recently bought a lot of apartments actually for our investor clients, and they're investors who came to us thinking that they would buy maybe a 2-bedroom apartment. And because the market had turned, we were then able to capitalize on the changing market, and we bought them 3-bedroom apartment for basically the same budget.
Oh, wow.
So as an investor, you need to be really savvy. And the tip is to identify the gaps in the market where you are able to then extract the maximum value out of the change in the marketplace. Whether that's a 2-bedroom unit that you suddenly can afford to buy a 3-bedroom, or maybe it's going from one suburb to another suburb that you would have been priced out of a year ago, for example. So it's looking to just stretch your dollar and to try and get better, for your money. So it's not about whether or not you should buy or not buy. If you're ready to buy and you're financially able to buy, then you should buy. But you should definitely be ambitious, and you should aim high.
Good advice. I think what you're saying is we still have a good opportunity to buy if you do good research. It's still a window opportunity to get good deals.
Yeah, there's always good opportunities to buy. It's about whether or not you're able to spot those opportunities. Because, for example, if you're typically looking for like a 2-bedroom apartment and you've just been looking at 2-bedroom, it might not even occur to you to go and check out the 3-bedroom unit, right? But if you are looking right now, maybe say your budget is $1 million, go look at things that are 1.1, because you never know, you might be able to get those. So don't just restrict your search parameter very tightly around your budget, because there is some movement in price right now.
You just broaden the search criteria, so you never know what's going to come in.
Yeah, and just be honest with the agent and say, look, my budget is this. I understand that this property, I probably can't afford it. But if for some reason, the price changes, or if some reason the vendor needs to sell and, the feedback on price isn't where you're hoping for, can you please get in touch with me? There's no harm in doing that.
Do you have any success with this approach?
Oh, absolutely. Because what it is you're allowing the door to stay open. And you should never be aggressive, and you should never go in there going, well, market's changed, have you not noticed the prices have dropped, because that kind of pisses off the agent, right? So you want to take a little bit of a humbler approach, and just go in there and say, look, this is my first purchase or whatever it is, and I understand that I'm limited in budget, but I'm hoping you'll keep me posted if anything changes. And all it does is just keep that door open for them to get in touch with you without them losing face as well, because no one likes to feel like they're being backed into a corner, and you're the only buyer and you're sort of backing them into a corner. People don't like that. So I think you have to be a little bit diplomatic in your approach if you're trying to negotiate with an agent.
That's great. I think the approach, the strategy, only the end result matters. So.
Yeah, because sometimes, people can be a little bit too smart for their own good. And there's no need to be cocky. Yes, I understand the market's turning to become more of a buyer's market, but there's no need to be arrogant about it. There's no need to, because some buyers are frustrated because they've been on the back foot for the last 2 years, and they're like, it's my turn, and then they start to get a little bit arrogant, a little bit cocky with the agent, and there's no need for that.
Yeah, I find that, that's very interesting. It's not a good approach to do it, isn't it? It's only the end result matters. Oh, thanks, Henny. Really appreciate your advice and update. Anything more you want to add?
No, I think, take your time. There's no rush. I don't see the market changing sort of dramatically overnight. You don't have to rush out and sell your property because the market's going to tank. But I think it's a good time for anyone with a portfolio to go back and reassess all the properties you own. Is it an A-grade property? If it's underperforming, get rid of it. If someone will take it off your hand and you don't make a loss, get rid of it, upgrade and buy something better. If you have a really good portfolio and you have a lot of A-grade properties, just sit tight, hold on to it. At the end of the day, it's only paper loss and paper gain, right? Until you actually transact. It's fine. And I'm certainly, I have a portfolio and I'm not panicking. I'm not, rushing off to sell anything. Look at, in a transition market, it's a good time to also look at how you can add value to the property. You don't necessarily need to sell in order to capitalize. You can manufacture your own capital growth through renovations or whatever it is you want to do.
That's good advice, and I really appreciate it. It's very, very valuable.
No problem. Anytime.
You're always welcome. Look, are you happy if the members have any questions and reach out to you?
Yeah, of course. Feel free to send me a message.
Okay, that's great. Thanks, Henny. Really appreciate it. Look, I will invite you back again soon. Just give another update and share your advice as well.
My pleasure. Thanks, Eric. Thanks. Bye.
Bye.